All right, so we're continuing to go 1040 line by line, and right now we're on line number 3. We're going to be looking at dividends. So we're going to have ordinary or qualified dividends. So what probably happened is you received a 1099 div, and you're sitting there saying, okay, what do I do with this? Or maybe you're working with a TurboTax or a Tax Act or H&R Block or some program, and it's saying, okay, well, now you have dividends, and you're trying to figure out, well, how does this dividend thing even apply? How does it relate to the rest of my income? Those types of things. How am I taxed on this stuff? Which is great if that's what you're doing and you're trying to figure out the why, because that's how you're going to eventually get to tax planning to minimize your taxes by understanding how this process works. So what we're going to do is we're going to go through the areas, a little bit complicated in areas when you're trying to determine the difference between a qualified and a non-qualified dividend. So we're going to go through, we're going to look at the 1040 line 3 first, and then we're going to start walking through the process on how we do this, how we're going to include an item for the qualified dividends in line 3A and what that means as it relates to line 3B and how you're going to be taxed on each. So that's the mission for today, and that's what we're going to go ahead and start with. So let's look at our 1040 line 3 real quick. All right, so here's what we're looking at. We're looking at just lines 2 and 3 of our 1040. Now, in the last video, we talked about lines 2. So let's just look at line number 3, and you can see that it has a 3A and a 3B. So we have our qualified dividends and our ordinary dividends. Now, this can be confusing for taxpayers, so I want to make sure we understand what's happening here. When we look at this, the total amount of all of our dividends are going to be put in line 3B, okay? Now, we may have to go ahead and use our Schedule B. There are certain requirements, such as a threshold of if you have $1,500 or more in interest or dividends, then you go to the Schedule B. I have a separate video on Schedule B, so I don't want to get into detail with Schedule B. But what you would do is you would determine your dividends on 3B, and then or Schedule B, and then you'd bring it over to 3B. So what will happen, though, is your total amount is going to be under ordinary dividends. Now, you may have a portion of those that are going to be considered qualified dividends. Well, then you would put your qualified dividends in 3A. So your line in 3A is likely going to be smaller than your line in 3B, because in 3B, it includes all of your dividends, including those that will be included in 3A. So 3A is a subset of 3B. So it seems kind of different. You think you're subtracting them out. You're not doing anything with those at this point. This is going to all be included in taxable income as it goes through. Eventually, we're going to have a worksheet that's going to have us separate them so we can then apply the different tax rates. But that's what we're focused on right now. So let's go ahead and start looking at this process and getting a better understanding of what we're dealing with. So here's why we care about whether we have qualified or non-qualified dividends. Qualified dividends are going to give us better rates. We're taxed at a lower rate. So our preferential rate is going to be 0, 15, or 20%. Okay, that 0, 15, or 20%, that's based upon your income. So there's thresholds that you look at every year, and it's going to be, okay, where am I going to be? If you're in the lowest brackets, you're generally going to be at the 0%. If you're in the highest bracket, you're going to be at the 20%, but most taxpayers are going to fall at 15%. So line 3A, if it ends up on line 3A, that's what it's going to be taxed at. Now, all dividends are going to appear on line 3B, okay? So when you're looking at line 3B, that's your non-qualified dividends, or we call those your ordinary dividends. And they're taxed at your ordinary tax rate. You don't get preferential rate. So if you're at the 37% tax rate, then you're at the 37% tax rate, and you're going to be taxed at 37%. Had it been a qualified dividend and you're at the 37% tax rate, you would have been taxed at 20%. If you were at the 10% tax rate, you would have been taxed at 0%. So that's kind of how the thing works. So we would prefer to have qualified dividends, but we need to meet the requirements in order to have a qualified dividend. So let's go ahead and look at some of these requirements that we need in order to have our qualified dividend. So this is what we're looking at when we want to determine, or when we're determining whether we're going to have a qualified dividend. First thing is it has to be paid by a U.S. corporation or a qualified foreign corporation. It has to be one of those two. If it's a U.S. corporation, it's probably going to apply. There are certain rules that will relate to a foreign corporation. The next one is going to be you have to have a holding period, so a specific holding period. Now, what that holding period is it's going to be 60 days in basically a 121-day period. Okay, so 60 days before, 60 days after basically your dividend date, your ex-dividend date. So that's basically what you're looking at. So it's during that 120-day period. You have to have had it for at least 60 days. It doesn't mean you have to have held this for an entire year in order to have a qualified dividend, because we're not talking about things like capital gain. This is 120 days, so within that 100-day period. So you have to have it 60 days within the 120-day period. The next thing is it's not paid by a prohibited entity, so nothing like a money market fund. They generally don't go ahead and apply rights and those types of things. You have to have a 1099 div, and what's going to happen is your broker is going to say, okay, these are the ones that qualify as a qualified dividend, that you held them for the proper amount of time. And that's what you're going to get that's going to be used in order to complete your 1040 and to be able to say, okay, this is a section that I'm going to be putting on my 3A as a qualified dividend. And then the final thing is, remember, even if you have qualified dividends, it's still included. That amount of your 3A of all those qualified dividends are still going to be included on line 3B, because it's still a dividend. So line 3B includes all dividends, and then line 3A is just a subset of those. But line 3B is going to include them. So it's going to include those plus the ones that are not qualified. All right. Well, let's keep looking. Let's keep moving forward so that way we can make sure that we're getting this down and you're ready for the tax season. Everybody, if this video is helping, please remember to go ahead and subscribe to this channel as I continue to publish more information on our line-by-line efforts all the way through the 1040 and some of our relevant schedules and forms to make sure you're prepared for tax season. Okay, so what I have here are the steps that we're going to go through. So remember, when we first start out, what we're looking at is we're saying all dividends are going to be put on line 3B. So that's going to be everything. Now, we may have to use Schedule B in order to do it, but it's going to be included on line 3B within our 1040. Okay? Then what we do is we say, okay, now do we have any that have been classified on our 1099 as qualified dividends? And if so, we're going to list the amount that was qualified also now under 3A. So those that were in 3A are also included in 3B. Okay, so now that we've done that, we're taking the line from 3B and we're going to include that in our line 9. So we're going to go ahead and we're going to include it in our total income. So what you're basically looking at is total income there. So we have our total income. Now that means we're only being taxed on it once when we're getting to total income. We now get to taxable income. And now what we have to start doing is we have to say, okay, with this income, with our dividends, we're not being taxed at our ordinary tax rate on everything that appeared in line 3B. So what we now have to do is we have to look at our 3A and we have to say, okay, so out of that amount that was on 3B, the amount that also appeared in 3A, that's going to be taxed at our preferential rate, the 0, 15, or 20% tax rate. So we're going to go ahead and we're going to use our qualified dividend and capital gains worksheet, and we're going to be able to figure out what our tax rate is for each of those types of dividends. So we're going to go ahead and we're going to now be able to do that for our qualified dividends that are taxed at the lower tax rate. And then the remaining dividends is going to be taxed at our ordinary rate. So the way that we're doing that, the reason we separate those out is, first, we're making sure that our qualified dividends are being taxed at a lower tax rate. And second, what we're doing is we're making sure we're not being double taxed on it again, right? With treating them also not only at the lower tax rate, but also including them still when we do our ordinary tax rate. Otherwise, qualified dividends would really suck because we'd be double taxed on it, right? We want to avoid that. Qualified dividends are something that are preferential or beneficial to the taxpayer. All right, that is our coverage of line number 3 on our 1040. So what we will do now is we're going to start moving over to line number 4, and we're just going to keep working our way through here to make sure you're ready for tax season. All right, thank you for watching. I hope your tax season is going well.